All right, guys, what's going on? Hope you're all doing well. Welcome back to another Sunday market breakdown. As always, I'm just going to go ahead and give you guys my general idea for what I think is going to happen throughout the rest of the week, and also go over the trades that I took in the past week. If you guys remember from the last market breakdown from I think it was Tuesday, let me pull up the exact date so you guys know. Tuesday, the 10th of December. We did a breakdown on that day, if you guys recall. And yeah, you guys saw the trade idea that we had playing out. And that was basically a pullback to this 2677 zone and, a move from there. Just one more thing I forgot to say before we get started. A few of my Telegram pages and things like that, including my free group, do have the risk of going down for some weird reason. So make sure you guys check my story out just in case, you can get the backup channels and things like that. So you guys can still stay connected with these webinars and trade ideas and breakdowns if anything does go wrong, right? So yeah, make sure you guys stay connected. And yeah, without further ado, let's get straight into it. And again, if you guys want any pairs, if you want any pairs for me to mark up, let me know and we can go from there. Can you guys hear me all right? Yeah. Lucas just said he can't hear me. You might have to just change your mic settings to output speaker. All right, great. Perfect. And yeah, if we save the questions a little bit to the end of the breakdown, then I'll answer them fully in depth, and that'll be the best way for you guys to hear my full answer. But anyway, if we go back to the trade idea I posted on the Discord, I'll try and pull it up over here so you guys can see for yourselves. So let's go to the market overview. I had a thingy there anyway. It was just basically a Fibonacci long if you guys have a look at that right there. Okay, so it's just like a higher high, higher low, higher high. So over here, market open or on Tuesday, I think it was, Tuesday night, it was basically the market was up here, right? And if we go back into replay mode, I'll show you guys exactly what we were looking at and what we were working with. Now, as you can see, you're probably thinking, okay, there's multiple support and resistance areas, right? Or multiple levels of support. How do you know which one to go for? Well, my basic principle and the principle that you guys need to follow is very simple, and that is buying low and selling high, right? Going for a buy all the way up here is kind of risky, especially when we do have, some sort of inefficiency to the downside here. Obviously, this 4-hour candle has just played out because of replay mode, but before this point, the market was like settling around here and we had a lot of inefficiency in this region here. And alongside that, we had at this 2677 zone a previous level of rejection, resistance, right? A reaction even. And then the market fell down. It came back up very slowly and it blasted through that area. When the market blasts through with a lot of speed, right, in one direction, that's an area you want to keep your eye on. And along with that, you can use your Fibonacci tool to go ahead and give you a bit more guidance. And when we saw this, you can see the 61.8 region was a very, very nice area for you to go ahead and take a trade off, 2677.5 to be exact. Now, from here, as you can see, if we play the chart on, market came down here at Asian session, right? Mid-Asian session. And as you can see, straight after 61.8, we had a beautiful reaction. Now, a lot of people actually, I believe it was in the DTI chart, a lot of you guys did catch this move, right? Now, to be on the very, very safe side, you could have put your stop loss around 100 pips and put your take profit at least at the zero here, which would have been a complete break and retest type of move. So break, retest, continuation. And at this point here, you don't know if the market is actually it's either going to hit this area, if it's going to fall a little bit short, or if it's just going to break through, right? But the safest thing you can do is try and put your your take profit at the previous equal high. So worst case scenario, it actually makes a double top and then potentially falls. But by then, you've gone ahead and taken profit, you've made your money, and you're good for the day. Even potentially a reaction from the zone, right? As long as your stops are being somewhat trailed and you're managing your profits, you could be looking at a minimum of a 1 to 2 risk to reward. Now, how could we have gone over this? Because a lot of people were asking me on my Instagram. You guys were asking me about my entry confluences and entry signals, right? Very good questions. But again, it's very simple, and it's also, I'll be honest, it's very unique to you as a trader. You have to understand that you can always backtest and you can always forward test and demo trade. But when you're in the live markets, you're going to see, for example, this rejection candle at one point would have been fully red. So this rejection candle here, which ended up being a rejection candle, could have just been like the previous candle at one point, right? But the people who have experience in the market or the people who are aggressive traders, they would have looked to take a trade off this zone here and probably put their stop loss either below the next Fibonacci zone, which would have been the 70.5, for around 50, 60 pip stop loss, right? Which would have meant potentially the market could have come down into this Fibonacci zone and then reacted, right? But again, this area right here was proven to be a previous level of resistance, resistance, break above, came back, and then support, right? So an aggressive entry would have been taking it directly off the Fibonacci zone, and a bit more conservative would have been waiting for the 5 minute to give you that rejection candle. Okay, once this candle's flipped and rejected, technically you could have put your stop loss tightly below this low, but then again, you would have been very close to being stopped out straight away. So the benefit of having an aggressive entry means you would have had a better stop loss and potentially less drawdown. The benefit of having a conservative entry means you're getting in with more confirmation, but at the same time, you're more prone to having a bit more drawdown because price can test a support or a resistance zone more than one time, right? Ideally, yes, we want to see one touch and it fly away to our profits, obviously. But the truth is, it can test it multiple times. It doesn't even have to, come down here, test it once, come down again, break above. It could even come down again, come up here, mess about a little bit, come back down, and then fly to take profits. This is what it does as well. When the market does a big move, it will usually come back to your area of entry multiple times. So that's why it's very, very important to always trust your analysis and just stick to your trust the process, trust the analysis, and let the trade play out, right? And as you can see from here, the market gave us enough of a move to take profits. And then from here, the market had a little bit of rejection. But to zoom in here, you guys can see, again, it's playing about a little bit broke structure to the upside here. At this point, you could have potentially moved your stops over to the next low. And if I forward it, there you go. That would have been a take profit hit. And exactly, notice how it came exactly to this previous level and had a little bit of a reaction. Again, that is somewhat of a liquidity pool. And then from that point onwards, it went straight to the minus 27 Fibonacci extension level. And overall, we simply just marked out these previous higher highs and higher lows. So we had a higher low, we had a higher high, we had a higher low here, we had this next higher high. And what did we do here? We saw that this is a big jump right there. You see that literally almost identical, which is insane, right? And then you draw a Fibonacci and you can see that from this leg to this to the upside, the market came down here. And again, I posted that clip in the free Telegram, which again, right now is private. So make sure you guys request that to join so you can see the previous clips. The clip here was me saying basically we could even have this moving average reject by this point, right? So yeah, that's pretty much it. I don't want to go over it too much, but if that made sense, let me know. And yeah, we'll move on to the next trade idea. In fact, we'll leave that Fibonacci on for now. Made sense. All right, perfect. So cool. Let me go here. Awesome. So let me go ahead right now and forward the chart. Cool. Okay, so now what's happened is if we go over to the higher time frame, I'll go onto the blank chart so you guys don't get confused with my old markings up, right? What's happened here right now on the 4 hour time frame. So in fact, what I'll do is I'll do a top-down analysis going from the daily mainly to the 5-15 minute. But the thing is here, we don't need to focus too much on the daily time frame just to give us an idea of the overall bias for the week. And what am I seeing here for the week? In fact, let's go to the weekly time frame. On the weekly time frame, we've had a big rejection off this zone here, 2720. Okay, we had a previous rejection of that a few weeks ago. We came down, we came back up, long wick rejection, but it's still a bullish candle, right? So potentially we could still get a wick fill and continuation, again, because we are super, super bullish. The only thing is, however, if you look at the daily time frame, if it loads, the thing is about the daily time frame, which I kind of like, is the fact that we did make a higher high, higher low, higher high, lower low. This was a lower low in comparison to this low, and you could argue this low over here. Now, when you get a break of structure, usually of more than one level, the probability of the market creating a lower high and a lower low is kind of high, right? But what I'm seeing here is a left shoulder head and then a right shoulder here. But now this right shoulder, you can't say has failed, nor has it worked. Because if it has failed, it would have been like this, and then a clear break above, and it would sort of been trending to the upside, and that wouldn't have been a right shoulder. But what you could class this whole region as over here is some sort of a resistance level, right? So you've got like a high here, high here, a low here, and then somewhat of a retracement to this area, right? Which is somewhat, you could argue, in this region over here, well, you can see a bit of resistance there. And what we've just about seen right now is what I call a liquidity sweep. You guys obviously know it's a common term nowadays. And very simply, we've gone just above the previous, I'd say, I think it's monthly high, I think it must have been, or the previous like 2 weeks high. And we've swept that and we've pushed strongly to the downside. Now, what I don't like is the fact that there was this consolidation we were in the whole of last week, if you remember. And now we're kind of coming back into that range, okay? So two ways you can look at this. This could be a break of structure for a retracement to continue to the upside, right? Or this is probably a run on stops over here, where the people who were selling here, who had their stop losses tight, have probably been tagged out, and now the market is potentially trending to the downside. And if it does continue to trend to the downside, that means our theory of this whole move being a big head and shoulders is probably correct, right? Because ever since I saw this, and then this, I was automatically looking for that retracement for a continuation. But like I said at the start, you're not going to have these plays play out so perfectly. They're not going to go out like zigzags like this. In the grand scheme of things, yes, but a lot of the time when a really big move is about to play out, the market will tease you. The market will go back to your entry zones multiple times. So there's a very high chance this could still be somewhat of a resistance zone, and then we could get a break of this low, which would then in turn finally make a three-leg extension to the downside. A lot of you might be asking, what's a three-leg extension? It's a very powerful move. One, two, three. Retracement, continuation. That's what we could look for overall long term, as long as we kind of break, I would say, this consolidation box to the downside. So short term, let's have a look at the 1 hour. Honestly, there's not much trading data here for us to work with, apart from the market being very slow. I haven't taken any trades since last week, apart from, let's have a look. Ignore all these lines for a second. I just don't move them for a while, apart from this trade over here, right? So apart from this trade over here, there wasn't any other clean setup. So I pretty much stayed out of the market. When the market did this double top break to the downside, and then this, I was ready to sell basically from this region over here. Why was I ready to sell from this region over here? Because you had what? So resistance, support, a break of support, and now what I was hoping for was a move back into here for a push to the downside, or a push back into 2710 and then a push to the downside with my stops above the high, and yeah, targets at these lows over here. So that was basically the plan I had, but I missed on that trade. I didn't revenge trade, and yeah, a lot of other people were waiting for this move after they saw this double top. But again, you can't, chase the markets. You don't want to let those type of moves, get to you. And yeah, that's pretty much it. You don't want to overthink these type of things. Just stay out of the market. I mean, there wasn't many moves after that. I think it was what, Wednesday, Thursday, Friday, and that was it, market close. And again, we didn't have much clean moves over here. So yeah, right now the market is kind of messy for gold. If you guys want me to mark up any of the pairs, let me know. But for now, I think on the short term, what I'd be looking for is, because we come back into this region over here, which is a clean resist support zone, right? I would just simply wait for the market, ideally, because again, I don't like these small candles. These small candles with low volume, they're not making it clean, right? So what I would like to see is, if we maintain above this 2643 level, I would like to see a break of structure to the upside, right? Ideally taking out this previous high. So if we can get something like this, we could get a little retracement, making somewhat of an inverted head and shoulders to then continue the market to the upside, right? That would be like an early market open thing, but personally, I don't like to trade Sunday market opens. It can be, the gap spread, slippage, things like that. I don't really like trading market opens. I like to give these breakdowns during the middle of the week, so I see what's in motion already, see the volume already picked up, so we can just, catch the move for the rest of the week. So that's that for now. But yeah, let me know if that made sense so far. If you guys are understanding the kind of the whole methodology of the way we're looking at the markets. We're not just trading it at these levels. We're waiting for market structure. We're waiting for the market to give us some sort of rejections, entry signals, things like that, and then kind of going from there onwards. So let me see. Also wait for this USD JPY markup on GJ NAS 100. Do you trade indices at all? No, I don't trade indices. Okay, let's have a look at. And also, sorry, one thing I forgot to mention was I think if we do manage to break 2642 to the downside with a strong closure below, I would look for a 5 or 15-minute retracement to continue this small kind of volume to the downside. And again, you'd be looking at small stop losses here. I mean, it still looks small, but it's big, but around something like this. If the market was to break below here, you could look for a retracement back into here after a rejection, look for an entry, put your stop loss above the wick high, give it a bit of room to breathe, and then target the next level of support. And that could be a trade idea, right? Do you always want to see a sweep intraday before an entry? Um, it depends which direction I'm trading. So if, for example, I wanted to see the market do this play right here, I would like to see a run on these stops over here. I would like to see that followed by a break of structure to the downside, a strong break of structure and a closure. And then I'd like to catch a retracement between any of these points so the market can give us that type of move. And then, look for an entry like that, put stops ideally above this high to be correct, to be riskier, go for a tighter stop, and then something like this, if that makes sense. So yeah, that's that for now. Let's get rid of this. Yeah, don't worry, Shamrez. The recording will be on my group or on the DTI group as well. Do you swing trade bot? If so, how long do you personally hold a gold position, or do you still just fulfill your risk to reward? So, good question. I don't like to swing trade, but I only swing trade if I see a very, strong position. And what I prefer to do though is I prefer intraday. So if I, like the other day, I tried to trade within this consolidation, which was really bad. So even though I caught this amazing, amazing move from here, which banked me $20,000 on my funded account, which took me out of around $5,000 of drawdown. Oh, sorry, 5% drawdown and made me 10% gain on it. So, and again, I think I request my withdrawal for that tomorrow. Yeah, tomorrow. No, so Tuesday. Um, that was a very, very nice move. But I literally made that same amount of, profit literally by trading it somewhere in here. I can't exactly remember where. I think it was this move here. And I just got very greedy. I thought, okay, we've broken these highs. Now the market's just going to fly to the upside, but it didn't. And it came back, took me out. And then that's it. I went ahead and took this next entry. Very, very clean move. And yeah, that pushed the market right to the upside. But yeah, that was that. So then my two trade ideas for gold, if that's what we can see, that's what we'll get. One thing that is definitely still valid though is a continuation of this bearish play. And one thing I'm seeing that's clean is this moving average. Notice how the moving average is already above price. So we're somewhat bearish as of right now. We could see something like this and then like that, right? That's something that can still definitely play out. So I think Raul might do yes, all those futures. I'm not familiar with futures too much, but let's have a look at you guys said Euro JPY. So what time frame do I want to see the shift of structures at areas of support or resistance? Yeah. So I want to see areas of support or resistance getting disrespected. If I see the market respecting a level of support, then the bias could be bullish. If I see it disrespect a level of support, so break below it, then the chances are it's going to return back to that area as a level of resistance. So yeah, that's kind of what we're looking at there. I don't know why this chart isn't loading. Okay. So daily time frame. When I'm going on the daily time frame, by the way, you don't have to zoom out as much as I'm zooming out. Like this data all over here, this has no significance to the trade we might take tomorrow, right? Absolutely no like real, you know, correlation to the move we're going to take. But it just gives us an idea. Okay, we're mainly bullish, but we've had a recent break of structure since the 10th of July, right? And if we go to the 30-minute time frame, or we'll go to the daily, okay, daily, we'll go to the 4 hour. On the 4 hour time frame, I can see a very, very clean market structure here. So automatically I'm just looking at, and again, trend lines do work, guys. A lot of different strategies work, but it's up to you how you want to take them. This is just a subjective thing. People can draw them different ways. It's just an idea to tell you, okay, look, the market's respecting a bullish sort of environment. And what I'm seeing automatically here on the 4 hour is a straight fair value gap right there, or some sort of inefficiency. And what I would like to see is the market return into here, give us some sort of a switch of character, change of structure, whatever you want to call it, within there, on maybe the 30 or the 15, and then kind of go from there. So that's my kind of outlook on Euro JPY at the moment. I don't have my areas of support resistance marked up, but technically I don't really need that. I just need to see overall general area. So on this 4 hour over here, we did have a decision point there. We broke it. We've come to the upside here now. And I do like to look at these, the body closures. So you see this body closure region here. This would be kind of like an area I'll just keep my eye on if it works. Yeah. So 2162,200 is just an area where if the market can come up to that on maybe the 15-minute, based off this recent structure here, what have we got? We've got expansion, you've got consolidation, and then you've got another expansion to the upside. Is this expansion roughly the same size as this? You could argue, yeah. So once we come up to this 26,200 area, you could look for any entry confirmations here to continue the market to the downside. Now, when it comes to the downside, you don't need to start thinking, okay, we're going to catch the big drop and we're going to go for like a 1 million pip move. No, because we are super bullish already in the 4 hour time frame. The thing is here, you might just end up catching a little reaction move, which could still be enough, right? And what I mean by that is the market could come into your level of resistance. It could come down into support, right? React off this region over here, and then continue back to the upside. So you need to make sure you manage your profits, especially if you're counter trending, right? Or counter trading, whatever you want to call it, right? But then the chances are, if you manage your position, you could see a break of this level and fully a retracement back down to that major 4 hour zone, right? Wherever that was, which was here, sorry. Yeah, which was around here. Because overall, what we have is a Fibonacci long idea where the market could come into these areas and then potentially just, continue back from there. So for now, I would just wait. And if before we get to this 2162,200 area, we get, some sort of a pullback here, I'd still be very careful because I don't like the fact that we have so much bullish pressure here that hasn't been mitigated, meaning when there's so many buyers in the market, it has to be somewhat evened out and balanced out. So we want to see sellers come into the market here, even the pressure out here, right? And if we can get somewhat of a reaction here, then we can take it up. But in the short term, we can definitely see a small reaction from here. 15-minute Fibonacci long, coming to here, stops below this low for a continuation to the upside. Once we come to 26,200, could look for an entry signal to push this market to the downside. Not a full swing bearish move, but potentially a reaction, which is a short-term play, which could turn into an intraday or even a swing move after that, right? It just depends if whether or not you want to manage your position at this area here because it's a previous level of resistance, which as after it breaks, it could become a support and then continue back to the upside. But if it just melts through it, we could get a small potential, head and shoulders somewhere here, and that could be the fuel to move the market to the downside. Does that make sense? Because right now this is looking very clean. Euro JPY. How often do you trade in your Discord SSC? Every day, I think it is Monday to Thursday, New York session. How to join your group. All the links will be on my socials. Just check that out. Do you trade through the whole New York session or do you limit yourself to a certain amount of hours waiting for your setup? So I used to trade New York session only. So from New York open plus 3 hours, that would be like my window. And for you guys who are wanting to find consistency in your trading, you have to try and minimize the variables. I know it might sound like a broken record continuously saying the same thing that's over and over again, but I can't stress how beneficial it has been for me because it just works. A lot of other traders might say, oh, trade more pairs because you get more opportunities. Yes, you do, but also you're more open to more risk at that point, and then you're also more open to just missing plays on one pair and then over trading and forcing trades, right? So what I used to do when I first started to become profitable with prop firms was I went ahead and on my prop firm account, I remember just specifically limiting my trades to only be on one pair on one session, and I would use one or two strategies at the very most, either a bounce play or a retracement play, depending on what the market gave at those hours. Because then at this point, after I do those, if I follow those rules right now, over 10, 15, 20 trades, you will see that, okay, this trade was a loss because I traded out of hours, or this trade was a loss because I didn't wait for the right rejection. You can actually pinpoint what your reason for the loss is, right? And that's pretty much my idea. I think it was on my Twitter. If you go to my Twitter and you go to my media and you scroll like quite far down to like, I don't know, you might see it in, I don't know, it was like last year, even in summertime, like July or June last year in 2023. I hit my like one of my first 10K days there. And prior to that, I put a post out telling you guys like, look, this was with 1% risk only. I passed the challenge just to prove to you guys you don't have to do 3 or 4% risk like what I can do right now. Because right now I can afford to risk 3, 4% on a challenge. Even if I blow a challenge, for example, I can still, pass the next one and then, continuously milk that one funded account and make, 5 figures from it in one go really easily. That's now though. Before, when I was breaking out of the break-even stage, I was still doing 1%, but even then I proved to everyone that you can literally use 1% risk and still pass a prop firm challenge. And it took me 2 weeks, right? Nowadays it takes me 1 or 2 days, well, mainly one day. But that's because I can afford to lose if I wanted to, 4 or 5 times if you really wanted to. A lot of you guys might not be in that position right now, which is understandable. But what you have to understand is if you're going to be using low risk, it's more than likely going to take you longer to pass. But when you use higher risk challenges, point is, sorry, you are going to most likely pass sooner, but you're more prone to losing, a lot quicker as well. So what do we have here? Uh, what's the best platform that hasn't let you down? There's been a few, but I think the main one you'd have to just say is FTMO. You'd have to just say it's FTMO, honestly. Um, and I passed my challenge with Prime Funding last week using Funded Fast. I want to pass with Leveled Up. How much risk per trade would you recommend for the challenge? So first of all, congrats. Good that you got funded. And how much risk would you recommend for the challenge? So what I recommend for challenges, because this is a common question that I get all the time. Everyone asks me, how much risk can I put on a trade? Guys, how much risk can you afford is the question. How many challenges can you afford to lose is the question. If you look at my Instagram, one of my earliest posts when I was giving tips about trading and how to pass funding challenges, there's two big tips when it comes to funding challenges, right? Number one is buy a funding challenge when usually there's a good opportunity or the market's in a good environment. So when the market, for example, is looking really ugly. And for example, when it was choppy like this, last week, it wouldn't have made sense to buy. I mean, when I say the market, I just mean gold. If let's say you're trading one pair at this point, if you're trading one pair and you can't see a clean setup, you can't see a clean setup, don't buy a prop firm challenge because when you buy it, subconsciously you're going to be thinking, okay, now I need to take a trade on it. Now I need to take a trade. No, find the opportunity. Okay, you think something's lining up, go and buy the challenge. You're going to get your credentials very quickly and you can go ahead and take the trades right there. But again, if you can afford to lose or maybe buy, let's say, a challenge 3 or 4 times without it financially affecting you, then that's the best time to buy a challenge because even if you blow it 1, 2, 3 times, you're okay. And that fifth time when you go ahead and pass and you hopefully go on to make a payout, you've made back all your losses plus the refund of the account or the account purchase that you bought yourself. But yeah, that's pretty much it. Nowadays, there's many different prop firms. There's firms that get you funded straight away. There's firms that, you have consistency rule with. There's firms you have minimum days with. So personally, for me, I just want to get onto the funded stage very quickly. Obviously, the firms that say to you like, okay, there's zero minimum trading days, there's fast, transitions to the funded stage, whatever it might be. Obviously, they're going to come with a little bit more rules on the funded stage. But for some people, you'd rather have that than have, a firm tell you, oh, we're the most reliable and this and that. And then when it comes to payout, you're finding out there's a hidden rule here, hidden rule there. So just do your research. And overall, for me, time is money. So if you can go ahead and get funded as soon as possible, as fast as possible, then that's the best move to go for. Because right now it's kind of like a race against time. I'm not going to lie. I'm going to say to you guys, yeah, take your time, do things slowly, educate yourselves. But if I'm being really honest with you guys, this prop firm bubble is not lasting too long right now. So your aim should be to try and get funded as fast as possible. And that's what worked with me because last year, earlier this year, let's just say 2023 January till 2023 July, that was a very, very, or even before early this year, let's just say like um, November or October 2023 to July 2024 was a very, very nice window for prop firms. You had prop firms very fast, they were all competing with each other, they were low prices, whatever, and they were all paying out very quickly, getting you on the funding stage very quickly. But then that all the time, when you're always competing with another, when you're looking at when prop firms are competing with prices and challenge fees and things like that, it just leads to a point where it climaxes and it just all falls, right? Because there's no value in the market there. Little things happened, obviously, with the meta quotes, things like that, which, took out a lot of prop firms in the game. And then obviously you had some other prop firms which were, I can't remember the word for it, but they were basically owning multiple of the little prop firms. So when they went down, so did the others. And that messed it up for a lot of other people. But now it's become very strict, to get like these MetaTrader licenses and things like that. So yeah, I'll just personally trust any firms that can, yeah, having your licenses like that are legitimate and ideally have those like little to no minimum trading days so you can just quickly get onto the funded stage and make a quick bag and get paid out and then reinvest that money into FTMO, into your own personal account, whatever it might be. Your aim is to get onto the funded stage as fast as possible. Um, FTMO is still accepting US. I don't think they are, but I heard if you have a dual citizenship, right? For those of you guys, I don't know if you're like um, maybe from like the Dominican Republic or anywhere else, if you have those like dual citizenships, I think you can still get an FTMO challenge. Um, what would you say is a key factor from becoming profitable? Consistency is right here. Patience, discipline, consistency. I've written this on my chart right here because that's held me accountable. I've had that since like 3, 4 years. But it's true. Patience, number one, right? You have to understand this is you can't put a time limit on your success in this game. There's no time limit. But the more you put a time limit on, the longer it's going to take you. No time limit, focus on the skill set, and you'll get there faster than you think. Right? Most people underestimate what they can do in, 1 year, and they overestimate what they can do in like 2 or 3 months. So just have the patience, stay disciplined, and be consistent. Um, I've blown 10 plus challenges and I'm on stage one, halfway in profit right now. Would you recommend my risk setting up a bit? I'd be more selective. So Josh, don't fix something that isn't broken. If you've got to some point where you're actually doing well, don't fix something that isn't broken. Don't change up on things that don't need changing. What moving average is on your charts? This is the 200 moving average. It's prime funding reliable. Yeah, we know a couple of people within there, and we can get your challenge passed for you guaranteed. Me or the team will handle that. If you guys want more information on that, the links to that on my story. But again, yeah, one thing that's big is like there's some pages going down on Telegram recently, so we're moving things to like WhatsApp and things like that. So if you're interested, just hit me up and we can try and get you funded guaranteed. What other prop firm would you recommend besides FTMO? FTMO leveled up. Um, Thunder Pro I've heard is good. Prime they're recent, but they've got the MetaTrader license, which is what I like. I just got funded with them right now, 200k. Um, Need those chart colors, yeah. A lot of people use these chart colors, but yeah, they're the most reliable firms right now. I'm trying to also get the thing is with FTMO guys, right? If FTMO had like 3 minimum trading days or zero, let's just say, or one, right, one minimum trading day, and then they had like yeah, that was it. If they just had a lower minimum trading days and they had faster processing with their KYC and things like that, I would be max funded with them right now. But the thing with them is annoying because if I risk high, like more than 3% on my um what do you call it now? If I go ahead and risk about 3% on my challenge, they'll flag me. If I risk 3% on my funded account, they'll give me a warning. And it's just kind of like they're just capping you. So there's also that risk with FTMO at the same time as well. Although they might pay you out and they are reliable and they've been in the game for the longest, they can also deny you for just risking high, which is a very annoying process. Does any prop accept crypto trading? I haven't found one. Not that I know of at the moment. What do you think about future props versus Forex? I think futures have a little bit more rules, but I think like you can get. I actually don't know. I wanted to figure that out, but for right now, the with the current situation I'm in, Forex is still available, thankfully. So I'm going to still use Forex prop firms. And yeah, that's pretty much it. Um, did ACG continue to pay me? Yeah. So basically, with them, it was a long story. Very long story, in fact. Basically, they had a speech on. So for those of you guys who are funded with ACG, just remember this. Always check the news because there's sometimes a red folder speech, right? So let's say there's a red folder speech at 9 p.m., right? Or let's just say no, 3 p.m. Afternoon, right? The speech duration you won't know. You might be thinking, oh, just because it's a red folder news, it's the 5 minute before, 5 minute before and 5 minute after, you can't trade. But the truth is, if you were to place a trade from any time that speech was going on, so because that speech can last anywhere between like 30 minutes to 1 hour, and if you'd placed a trade during that time, they'd flag you for that apparently. But nowhere in the Discord, nowhere on the charts on Forex Factory is there like a duration for that speech. So I made around $15,000 in one trade setup with ACG, and it was during that news event, and it was about 15 minutes after the red folder event. So I thought I was okay, but then it turned out they'd flagged me for that, even though they never mentioned that thing about the speeches. Then they did an interview with me, which took 2 weeks to book, which was really annoying, and then they paid me out. But thankfully, now I've done all the minimum trading days. My payout's tomorrow, so I'll keep you guys updated with that. And yeah, that's pretty much it. How many trades are you taking per week, and how do you manage to not take a trade each day, even if the setup looks good? So Jay, it's all about experience. A lot of the time it's about experience. When you've been in the market long enough like me and you've taken multiple losses and you've blown multiple accounts, when you're lying in bed and you're just on your phone and you're just taking a trade and you feel like it, that's when you're going to realize there's going to be, multiple losses, and you're just gonna realize less is more. At the end of the day, you just need one or two trade setups in the in the week realistically to keep you profitable. I don't even trade, once or twice a day. That's the max. If I was going to trade every single day, I would only look for one or two trades in a day. No, one realistically. Um, yeah, and that's pretty much it. If I lose that day, I might just leave it. If I still feel that there's an opportunity available, I will still go ahead and yeah, go ahead and take that trade and see if I can get my losses back. If not, and I've taken another loss, then yeah, I will go ahead and leave out for the rest of the day. When there is a key level where you can go long and short, when can you be sure that which direction you are going to trade when the candle is just hovering around that area going up and down? So, Jaws, the thing is, right, no one knows for certain in this game whether or not the trade is going to play out, right? Like that's the beauty about trading, right? All you need to know is the fact that your risk should be predetermined, and the reason for that is because the reward is unpredictable, right? You just need to go ahead and backtest your trades over thousands and thousands of trades or months and months of data, right? So you can go anywhere and just go ahead and start to um, place entries on key levels, on zones where you believe there to be, some sort of a reaction to be made, right? It's just execution mostly. A lot of you guys, I don't know, like, how often do you guys trade on funded accounts or real live accounts where your money's at risk? If you're if you're going to trade on demo accounts all the time, I'm sorry, but you're not going to feel the emotion in there. Even if it's like, it can't be like a little tiny account, like $10 or whatever. It needs to be something that you feel like if you were to blow the account or if you were to lose, it would affect you somewhat, right? I'm not saying, put your life savings in an account or buy a 400K prop firm challenge if you can't afford it. No, I'm just saying the live trading environment, the emotions you have with it, is going to play a big part. A lot of you guys might just be like, demo warriors. I was one, back in the day, I'd be really good on demo, but when it come to the live account, I wouldn't know how to trade. But the only thing is, there's no secret sauce. The only thing is, realistically, guys, execution, execution, execution. When it comes to your area of interest and your checklist lines up, you should be entering that trade with at least, 0.5, 1% risk, whatever your risk might be. But the point is, does it tick the checklist off your trade checklist? So like right now, would I go ahead and take this trade right now? Of course not, right? I would never take this trade right now because it's 1 a.m. In the UK. Asian session, I don't think I've ever traded at 1 a.m. or midnight in the UK, right? If I ever have, it's probably been from the night before, and I'm letting the trade continue from the previous weekend or whatever it is. So yeah, so that's pretty much it, honestly, guys. I don't have much. Is there news today? Let's have a look. I think there is on gold. Let's check US 30 out as well, in fact. Let's see what this is saying. Okay, so this is what we had for US 30 the other day. I think I must have marked this up. Um, Yeah, of course, session number one, number two, market structure, number three, key level, number four, entry, signals like rejections, engulfings, whatever you want to think of that, order blocks, if it's in that region. And then number five, any indicators you can use like EMAs, trend lines. Yeah, overall indicators is kind of like the last thing you want to look at. But overall, from last week, I did recall saying that if we were to continue from here, you could just get a break and retest, which did actually work out very nicely because the market was very bearish. There was the break and retest, and then here's a continuation right now, and we've come back into this region over here. So now with US 30, what would I look at? On US 30, I would like to see some sort of a inverted head and shoulders. So we've been doing lower low, lower high, lower low, lower high, lower low. If we get a higher high here, I would like to see a little corrective retracement back into this region over here. Find an entry confirmation if it's aligning with the session, and then look to take it off, take it to the upside and see if we can catch a big retracement play. I think that's a bit unlikely, but that's the kind of play I'd look for if I was bullish. If I was bearish, I still wouldn't look for a sell right here. I think we're too low to enter a sell. And in this region over here, there is going to be a lot of um, liquidity being grabbed because we're now, in this special region where you could see, moves like that. Let's have a look. Carlton, could you write in the chat what the 5 points were? I'll just repeat them again so I forgot them. Okay, no, I'm joking. Session, market structure, support resistance key levels, entry signals, and number five, indicators, whatever the extra confluence you want to use. It's not really the main one. But yeah, it's like an extra confluence. When looking into news, should we only consider the USD news for gold or every other currency? USD and gold is the only thing, yeah, you need to look at. But yeah, that's pretty much it. No worries, Dennis. So yeah, if you guys found that helpful, let me know. I will drop you guys probably another breakdown this Tuesday or webinar or something. Appreciate you guys for hopping on. If you have any more questions, feel free to DM me. And again, remember, um, you can, yeah, just follow me on my socials. Everything is at Sniper Ads. If you want to get funded and if you want to have any bit more information regarding that, if you want to just DM me regarding any of the sort of questions, let me know. Again, the Telegram channels are private for now. A lot of, people are trying to take it down or whatever. So make sure you request to join and then just stay on there. And again, I appreciate every single one of you guys. I'll stop the share right here. How long was that? Let's see. Cool. How can I get in the WhatsApp and the private Telegram? Just request to join. Just click the links and uh, you will get the request and you'll be approved within 24 hours. And yeah, awesome, awesome. Yep, good morning to you too. All right, guys. I'll stop the recording here if I know how to stop it. Let's see. I'll send the recording out as well, into all the chats that I've sent out this link to.